Welcome to Coin Invest Special Edition.
And today in this video, we're going to talk about the US Federal Reserve, something very important that all investors, all traders should know and must know. Question is, do we know?
Yeah. So let us share a bit about ourselves. I'm Jeremy. I've been investing for more than 10 years. I've been in hedge fund before, and this is where I can share my experience on the stock market.
So as previous videos, I've been introduced myself. I have been doing investment for stocks and options. I've been doing investment for the last 25 years. I have been in healthcare industry in corporate for 28 years. And only about 3.5 years ago, I went into semi-retirement, into full-time trading. And now with Jeremy, we have been teaching together for a couple of years now.
Yeah, so some disclaimer and copyright. Basically, what we are sharing today is on our personal capacity, not for recommendation, and it's only for education and entertainment purposes. Right? Please do your own due diligence, and past performance doesn't guarantee future outcome. So please do take note of that, and please do not circulate and duplicate without our consent. Thank you.
And in today's video, we will be covering 6 topics over here. We want to know where does a Fed, what is a Fed, what is Federal Reserve, where do they sit in the government, what do they do, what is FOMC and their function, how they control the money supply and interest rate, and how does this affect all of us?
Yeah. So what is the Fed and where does it stand in the US government? Right. So there are 3 branches of the US government which states in the Constitution. The first of all will be the legislative, executive, and the third will be the judicial, right? And you can see on the legislative, the Congress, the Senate, and the House of Representatives will make the law. And then the president, the vice president, and the cabinet will carry out the law. And the last of all will be the Supreme Court and the other federal courts that interprets the law. So you can see in the Constitution, as what we shared earlier, right? There are 3 branches. So where does the Federal Reserve really stand? Okay, so it's actually in the National Economic Council, and that is where the Federal Reserve System is under the National Economic Council.
So speaking of the Federal Reserve, it was actually established in the year 1913 when the Federal Reserve Act was established, and that is what we call the Fed. The Federal Reserve, okay, is under the system of the Federal Reserve System, and is basically a central bank. It's a congregation of a central bank, and it has got 3 entities. What are they? First of all, it is the Federal Reserve Board of Governors, and they have the Federal Reserve Banks. There are 12 banks over there, and also the Federal Open Market Committee, in short, FOMC. So this is the Federal Reserve, and they are having the oversight of the Congress, and in such a way that to get the alignment with the country policies and the monetary policies over here. So one central bank, 3 key entities, and they have 5 key functions. It's important to know that the decisions and functions by the Federal Reserve is independent of the president, so that there is no influence from the president of the US.
So regarding about the 5 key functions, let's go down into detail. The first one will be it conducts national monetary policies over here, right, to promote maximum employment, stable prices, and moderate long-term interest rate. The second part will be to promote the stability of the financial system and seeks to minimize and contain systematic risk through active monitoring and engagement in the US and abroad. And then the third one will be promotes the safety and soundness of individual financial institutions and monitors their impact on the financial system as a whole. The fourth point will be the fosters payment and settlement system safely and efficiently through services to the banking industry and the US government that facilitate the US dollar transactions and payment. And last of all, to promote consumer protection and community development through consumer-focused supervision and examination, research and analysis of emerging consumer issues and trends, community economic development activities, and the administration of consumer law and regulation.
So knowing what the Fed is doing, let's look at the chairman. So this is a history of the past chairmen, and altogether there are chairman and chairwomen over here. There are about 16 of them. Of course, now it is Jerome Powell over here. And since it started in 1913, this is the whole history of them. And of course, the longest serving federal chairman is Alan Greenspan over here. He has 17 years of chairmanship over the Federal Reserve.
So how does the appointment take place, right? So basically, we want to see the process of it. Since the Banking Act of 1935, the US President appoints the 7 members of the Board of Governors. Then it was confirmed by the Senate and served for 14 years term. So the chair and the vice chair may be chosen by the President from among the sitting governors for 4 years terms, and is also subject to the Senate confirmation. By law, the chair reports 2 times a year to Congress on Federal Reserve monetary policy objectives. And because they are part of the policy making in terms of the Federal Reserve, they have to understand that they cannot be or shall be officer or director of any banks, banking institutions, trust companies, or federal banks, Federal Reserve banks, or hold stocks in any bank or banking institution or trust company, because there would be a conflict of interest.
So now that you know how the federal chairs have been appointed and how they, they operate here, let us now go to Federal Reserve, the building. This one sits in the Washington, D.C., and that's the building. And within this building, of course, one of the key entity is the FOMC. As you remember, the Federal Open Market Committee. How do they function? In fact, in this building, on the right side, which you cannot see, is this room, this meeting room, the famous meeting room, has been there since 1913, okay? And this is a big table here with all the voters and the federal governors, the Federal Reserve Governor, the Board of Governors, as well as the presidents of the central bank and the Federal Reserve banks. So what do? They are actually the branch of the Federal Reserve System, and they determine the direction of monetary policies and how they direct the open market operations, the banking system. And what do? They discuss the country economic stances, the policies, the development of local and global financial markets, economic and financial forecasts. So it is run by 12 presidents over here, and the discussion goes around with the Federal Reserve Bank and also the Board of Governors. But there are only designated FOMC members who can do the voting of a policy.
So talking about the meetings, right? This is the FOMC calendar, and you can see that FOMC meets 8 sort of secret meetings each year, right? You can see on the diagram, January, March, April, June, July, September, October, and December. In recent years, FOMC meetings minutes have always been made public 3 weeks after the meeting.
And if you follow closely our announcement and our news, we will always alert all our friends and our members those dates, those coming important dates, okay?
So how does the Fed control money supply? Okay, and you can see that as what Wai Min have shared, the different type of people who are in the FOMC. So what are the tools they are using to influence the credit and money supply, right? Basically, they are looking at 3 items over there, 3 tools. Number 1, they can buy or sell bonds on the open market operations. They can also control the reserve requirement in the banks, right? Either 3 or 10%. And they also able to control the discount rate and the interest on required and excessive reserves. So how does Fed control money supply? So it really depends on the objective, right? Either do they want to stimulate the economy during a recession? So what they will do is that they will buy government securities, reduce the reserve requirement, reduce the interest on reserve, and reduce the discount rate. And that will result in consumer spending, increase in consumer spending, and increase in business investment, right? So there is a shift of aggregate demand, and that will increase the real GDP, price level, and employment. So what if they want to stabilize the economy, right? What they will do is that they will sell the government securities, increase the reserve requirement, increase the interest rate, and increase the discount rate. and that will result in lower consumer spending and lower business investment. And then that will shift to a aggregate demand to the left, which is decrease. And then the effect will be the decrease in real GDP, decrease in price level, and decrease in employment.
So you can see that these two slides are very important to show the relationships and how Federal Reserve using the monetary policy as well as the various tools to affect and to drive the market. So here shows an illustration as an example of how the federal government increases the liquidity in the open market, thus the open market operations. For example, when they want to increase the liquidity, when the economy is not doing well, the first thing is that during the 8 times the FOMC meeting, that's where the 2 days meeting will be held. Very intensive meeting, closed door. And usually during this meeting, policies are discussed and voted. And of course, one of the actions would be instructing the Federal Reserve Bank of New York to buy treasury securities. And treasury securities will come in the form of bonds, notes, or bills, and they will buy those securities from the open market, from the banks. They are the primary dealers over here. And with that, asset is accumulated, liabilities are there, but in return, the banks would have money received from the federal government because of the sale of those treasury securities. And with the money available, it is now providing money to businesses and individuals so that they can have more mortgage loans, more car loans, boosting spending and the economy. So this is how the Federal Reserve drives the economy, increasing money supply to make sure that operations goes on. And that's how economy is boosted and therefore increasing revenue for companies as well as taxes. And that is a whole cycle of how FOMC, the banks, businesses and consumers would interact.
So how does it affect us? How does all these policies affect us, right? So you can see at individual point of view, right, as an investor point of view, a low interest rate environment makes borrowing more effective. Okay, so if companies can borrow money, if an individual can borrow money because there's lesser interest to be paid, right, that is where they can borrow more and then they can expand their business and profit. Okay, so when the rate, if the interest rate rises, right, so savers will reap the benefit. Why? Because now it's higher interest in the bank account, people will tend to save more money. So it really depends on you how you want to take advantage of the rising or falling rates for maximum financial benefits when it comes to borrowing, saving, and spending priorities. So to conclude, if interest rate goes up, you want to put money in the bank. If the interest rate goes down, you probably may want to consider putting money into the stock market or any other higher interest instruments.
So as investors and traders ourselves, it is very important to understand and to know when the meetings are having, what kind of policies are being made and how they affect the market sentiments in general. And by and large, the market movement, whether you're talking about Dow Jones, you're talking about NASDAQ or the S&P 500, it follows very closely the news and results of the FOMC meeting because it will drive market sentiments and how the bulls and the bears would trade. So it is very important that whenever Jerome Powell speaks, okay, we have to open our ears wide, and of course all the bulls and the bear players would want to know what is going on, what is happening, and therefore we all can expect high volatility during before and possibly after the FOMC meetings. Okay.
Yeah. So again, together with what Wami have just shared, right, there will be a lot of volatility that is going to happen before and after. So just say, for example, if the interest rate were to drop, the end result will be there is a high possibility that the market price will go up because lower interest rate comes with what? More borrowing. And when business can borrow more, means that they can expand more and make more money. All right. So then investors are more confident to invest in the stock market. So that's why the price goes up. But if the interest rate were to drop, when the interest rate were to increase, okay, then companies cannot borrow as much as they can, means that companies cannot expand as much as they want. So generally, the profit should go down. And then the investors will feel that it's not confident enough. They will take money out of the stock market. And then that is where the market price decreases.
And usually, when the market is doing well, what happens? When the market is doing well, and if, let's say, the stock market, as of today, it has actually gone up so high from the past 11 years. There was a dip, right? 5 months later, full recovery. And during this period, usually when the market is going up, the Federal Reserve will also use the monetary policies and tools to actually reduce the interest rate so that they can control the upsurge and the ballooning of the market. And this is one way to make sure that, there are lowering of the growth rate to ensure that it is actually kept in balance and check. So, we hope the session has given us all a good insight of how Federal Reserve works, the FOMC meeting, and how they affect the market. Okay, and next week we will be making another video on how the interest rates will be affected by the decisions of the Federal Reserve.
Yeah, and also, by the way, the next week will be the election, right? 3rd of November. So let's stay tuned, okay? And we will share with you more after the election on what is going to happen in the market, and hopefully we can provide very good insights for you. All right. So in order to keep update to the videos that we make, and also and to understand about the world news, right? It's always nice for you to keep track of it. And there is a call hub.me/world news. You can always go to this link and scan the QR code and get your information there. Or if you are interested to know more about options and understand about how you can invest safely with the market itself, you can always come to our Facebook close group and you scan the QR code over there, right? And then that is where we can meet each other and share with you more about the market sentiments and how we can invest more profitably.
And as usual, our main purpose is to ensure that there is a smart, simple, and safe way to invest.
All right. And then thank you very much for watching this special edition, and we'll see you on the next one.
And see you again.
Bye-bye.